And joining us now here on the program, Kevin McNew, Chief Economist with Farmers Business Network, FBN. Kevin, how are you, sir? Great to catch up with you.
I'm doing good. Good to see you again, Jesse.
Thanks for joining me here on the show today, Kevin. We have some new research to talk about from FBN. I'm very curious to get your thoughts on this and learn more about the numbers, but we're looking at fertilizer price, fall application plans, and in turn, how's that going to go into the thoughts for 2023 planting intentions? Now, obviously, just to start, we know fertilizer prices, that's been a big topic for months now. You and I have talked about it. What is just kind of the current state of fertilizer pricing right now in the U.S., Kevin?
Yeah, I mean, Jesse, really, fertilizer is such a key element to the farmer's budget. And over the last couple of years, fertilizer prices have more than doubled. And that's largely a result of what's going on in the natural gas and energy markets. Russia and all the complications that are going on in Eastern Europe and into Europe are having widespread implications. So natural gas prices are through the roof in the US, up 400% in 2 years. But in Europe, they're up 3,600%. That's substantially more so than the US. And that's causing European fertilizer plants, especially anhydrous ammonia plants, to shut down. And so we have this huge bottleneck around availability and pricing of fertilizer. So at FBN, we're trying to help our farmers see how are fertilizer prices varying around them. There's quite a bit of variability.
There is quite a bit of variability, and I'd love just to get some thoughts on what you guys have found in your research here with pricing, and then also in turn, what's that going to mean for fall application plans? Because we know that's going to play a big role in what farmers will plant in 2023. So, what are you hearing in your farmer surveys, Kevin?
Yeah, I mean, our farmers contributed a lot of data on prices they're paying for fertilizer this fall, and also their intention. So, in terms of prices paid, what we found is that there's so much variability in nitrogen-based fertilizers, whether it's anhydrous, urea, UAN. More variability from farmer to farmer than there is for potash. So what that tells me is that all the dynamics and all the kind of ups and downs of nitrogen pricing is really making it hard for farmers to kind of lock in a decent price. And that's kind of the first element. The second element, when we asked them about what they intend to do this fall, most farmers were pretty consistent about keeping their application rates the same. So I think that definitely kind of tells the story that farmers are not really scaling back in wide scale on fertility plans. Now, we did see some regions where they were pulling back, but I think that was more drought related. We saw Kansas, Oklahoma, Texas, Eastern Colorado producers who said they would cut back on fall applications. And again, probably more linked to drought than it is to pricing.
Well, and thinking about pricing as well, I mean, I know in the report you guys found urea prices have increased nearly 200%, DAP up what 112%, I think. I mean, so you think about some of those numbers, and then you think about our prices on the markets and in the cash trade right now when it comes to corn, beans, wheat, cotton, you name it. It really comes down to penciling out that margin and that bottom line for each grower, Kevin.
Yeah, I mean, the math gets a little complex every year because things are moving so quickly. And as we look ahead to 2023, farmers need to look closely at their budgets and their costs. And what I can tell you, the farmers we surveyed in this survey kind of gave us a glimpse of where they're leaning for 2023. And the big takeaway is a lot of farmers want to go into wheat. And even guys in the Eastern Corn Belt, which traditionally don't want to grow wheat, they're finding the economics work. And especially as you move further south, where they can double crop beans and wheat with favorable prices and with nitrogen so high, they're not going to use that nitrogen to plant corn. So I do think wheat's going to be a big gainer in terms of acreage in 23. The other crops, a little more on the fence. We saw upper plains, upper Midwest, where they had wet spring in 22. They're coming back hard with corn. But other areas were kind of keeping it about the same. So it'll be interesting. A lot of dynamics in play as we move forward here after harvest and into the 23 season.
Well, and I find that very interesting. Research came back looking at an increase in wheat acres, Kevin. I mean, let's, think about the prices on the board right now. We've seen, us get back around this $9, $10 level here in some cases in the wheat markets. A lot of that tied to the increase in tensions with Russia, Ukraine. If we can hold these price levels or higher, I would just have to think that that return on investment there, those margins, I think it would go in line with what you guys found. We could maybe even see even more wheat acres than you guys found going into next year in some of those areas that don't normally plant wheat because of just that price. As you mentioned, it's just the bottom line. It's a lot more profitable versus that corn planting, as you kind of alluded to there, Kevin.
Yeah, and just to put it in context, you go back to about 2014. That was kind of one of the big years when U.S. farmers really heavily double cropped wheat and beans. It was kind of the highest mark we'd ever seen. We haven't seen that level in quite some time, and I think we're going to get there with the markets playing the way they are. A farmer can look at his budgets and say, wheat prices are here, bean prices are here, and nitrogen is way up there. I think there's going to be a lot of farmers that pencil that into the rotation. And so I do think that wheat bean double crop really kind of buys some ground in the Delta and in the southern part of the Eastern Corn Belt, especially.
Now, Kevin, we were talking a little bit off air before we jumped on about the river levels on the Mississippi. The rail strike issue is back in the news as well. How much are variables like that playing into not only our markets, but into the decisions that farmers are going to be making here the next couple of months, do you think?
Yeah, I mean, the river market situation is very challenging. As we all know, the river just is a lifeblood for us exporting grain. And the water levels are exceptionally low. There's no real significant outlook of precipitation to change that, I would say, in the next 30 days. So what we see today is probably not going to improve anytime soon. And that's a kind of frightening proposition because this is obviously the season when we're trying to move a lot of grain. It's hard for our grain system to pivot into rail. It's not well adaptable to quick changes. And so that's going to be costly and challenging to do. USDA came out yesterday trimming some of their export numbers, but that was probably more just a function of tighter stocks, lower production. But if we have a month or two of really sluggish exportability along the Mississippi River, that could pose some challenges. So back to your original question, Jesse, does it change the farmer? I don't know that it changes them for next year's cropping decisions, but it certainly means a struggle because if you're within a few hundred miles of that river, you're going to see some pretty substantial effects from lower basis.
Yeah, and the basis I know is a big topic of conversation in farm country right now, Kevin. You mentioned the WASDE report for October. Just real quick, your thoughts there. Surprised at how USDA came up with some of their numbers when it was all said and done, Kevin?
Not especially. I would say, our yield forecast a couple of weeks ago, we put out our yield report was 171.5 on corn, which USDA came down to 171.9. We had seen from our FBN farmer data that Illinois was doing really well, Nebraska not so well, Texas not so well, Kansas not so well. So all those things kind of aligned with what we thought. I don't think there's a big yield surprise story as we finish up this harvest. I don't see anything in the data we see from our farmers that leads me to have different conclusions than USDA. Yeah, we'll tinker at the margin with some of the numbers, but it's not going to change the big story. I think what I'm really keeping my eye on here is what's going on in Russia. Does Russia really have an over 100 million metric ton wheat crop as they claim, or is it more like 91 like the USDA has been stuck on? In the short run, it doesn't really matter because it's all about exports, and they can't seem to export, and Ukraine can't seem to export. But longer term, in a world where we maybe normalize, which I don't think is soon, we do have to recognize that those countries have excess supply. So I don't want farmers to get fearful now. I think we're still in a very inflationary market. Commodity prices will stay strong, but geopolitical risk is very big and could curtail some downside risk if that were ever to get resolved.
Well, fantastic thoughts and analysis as always. I know folks want to check out the fertilizer report from FBN. You can find it on our website, markettalkag.com or fbn.com. Great place to get more information. Kevin McNew, Chief Economist at Farmers Business Network. Always a pleasure, sir. Thanks for joining us, and we'll talk to you again real soon.
Thanks, Jesse.